Let us have a look at the currency, whereby we saw the Kenyan shilling weakening on Wednesday, weighed down by foreign investors who are buying dollars as they book profits from this year's rally and pushing the main share index lower. The shilling fell as much as 0.4% in an intraday low of 85.3545 per dollar, compared to Tuesday's close of 84.95, 85.05. Looking at the Nairobi Securities Exchange, we saw the benchmark index falling half a percentage point to 4,886.69 points. With us in studio, we have Ensign Kihanga. He is the Chief Investment Officer with ICEA Lion Asset Management. Many thanks for joining us.
Thank you.
Now, we've seen the emerging markets falling to about 9 months low, and Kenya is part of the emerging markets, and there's a general fall in almost most of the stock markets. And in Kenya, we are seeing a much more, a sharp fall, because this is the fifth day we are seeing it falling. In the last 4 days, it has actually shed 2.5%. Do you see this continuing?
I think the important thing is to look at the context in which this is happening, because we've had a very strong market rally actually since the beginning of the year, since the end of last year. And I think this is part of investors taking profits on some of the stocks that they've been buying since the beginning of the year. So I think it's an opportunity for some of the investors, particularly foreign investors, to take capital gains on the investments that they've made, and also looking at the backdrop of the developed markets where returns still remain fairly low because of the financial and economic situation prevailing in those economies. So it's in that context that I think it's for foreign investors, it's an opportunity for them to maximize on the investment opportunities that they've made in the beginning of the year. Yes.
And with something like East African Breweries, which is the most capitalized stock in the Nairobi Securities Exchange, we had seen it hitting a high of more than 400 shillings, and now we are seeing it at 350. It was one of the stocks that actually fell yesterday, at 364 shillings. Yeah. What are the sentiments that you're drawing from the stock? I think
that is also an indication of probably the rally could also be an indication of significant foreign investor interest on that particular counter. Particularly at the point when it was reaching at peaks of 420 region. And I think once the desired position was achieved by whoever it is that has been buying, I think that then saw the price declining to the point where we are at today. So I think a lot of it, as I said, is foreign investor sentiment driven, and the profit maximization by those investors is a key factor that is driving.
How much more do we expect on this profit maximization?
I think a lot of it also depends on to what extent the domestic investors, local institutional investors, are going to take up that opportunity in terms of seeing that as an opportunity to buy, take up some of the stocks that we are seeing. Another factor that is also important is alternative investments. For instance, fixed income securities. Returns have, the yields and interest rates have also been declining significantly. So that could also be a factor that may drive, the domestic investors to look at the equity market as an option. But I think it also, I think the financial and economic situation prevailing in the country is also a factor for a lot of domestic investors deciding whether or not to take the opportunity. By this I mean, for instance, we are now looking at the budget this year and the implication it's going to have, and that is something that is weighing a lot in terms of the decisions that investors are going to make.
I'm glad you've mentioned the budget, because that's a big story that we have in East Africa. Which are the stocks you see benefiting from the allocations that we're seeing, especially in infrastructure, in education?
I think if you look at our market today, and also in the context of the budget, one of the key factors that have been mentioned consistently is the issue of energy, because for a long time we remain significantly energy deficient. So in terms of the government trying to make efforts to invest much more significantly in energy, as well as in terms of the infrastructure. Looking at specific sectors of the economy, if you look at, for instance, the retail sector, if you look at the commercial and service sector, for instance, the media companies, as well as the telecoms,
Media and Standard Group,
and as well as the telecom sector. So I think the impact of the budget generally would tend to be on an overall basis in terms of the impact on the business environment.
I've noticed that you've not mentioned manufacturing, and you've not mentioned the cement companies. But do you not see a trickle-down effect?
Well, in terms of the cement industry, yes, there has been a significant benefit in terms of the significant infrastructure investment. But what you also need, what we've also seen in the last several years is the fact that we may have seen probably a peak in terms of the kind of infrastructure investment that has been that we've seen in the economy. But although it is still a requirement, I think the challenge is to what extent can the government be able to finance a lot of these investment in infrastructure. Again, in the context of the budget, you may see that the debt levels have increased very significantly, and therefore, as for the manufacturing sector and the cement sector, yes, that is something that is lacking in terms of the efforts to make the business environment much more conducive.
Right.
But I think for us, the context is to what extent can the government be able to finance whatever is required of it.